The greatest part about trading is that statistics eventually play out as they should. Now, stats paired with other analyses like psychology and geometrics pose a great threat to a disadvantaged trader. In this particular case, I'll use it to strengthen you. Welcome back to the channel on this Thursday. This is ARCa, and let's dive into ticker symbol CLMV. Let's kill him, team. What is up, you guys? Thank you so much for stopping by once again. Let's go ahead and dive in to CLNV, and I'm going to go ahead and just remind you, or we're not you know what, it's going to be kind of a recap, right? A refresher here, because the last time we looked at CLNV, you know, it was just moving really slow. It was just slowly declining, and I did mention that it was going to be a while before we end up getting this play to actually move, right? So we've been looking at this breakout literally from back here at around 2 cents, right? It's been quite a while. And we got that breakout, right? We eventually took profit at that the first breakout target, right? Which was around 11.26. Price action reached 12.87. Then we started retracing and retracing, right? This is when I called the three black crows. It wasn't quite the three black crows because of the red candles. I'm sorry, because of the green candles, right? But they were. It was very similar. When you start to see large wicks to the upside like this, that usually shows that the bulls have lost strength and sell side interest is coming in, right? So yeah, we started this decline, right? We noticed that we were on a falling wedge here on the monthly time frame. We said that upon breaking out, yeah, we would need to come back and start validating the newly converted resistance into support. Of course, over the last 1, 2, 3, and 4 months now, almost 4 months, we have been in that process of validating that regression as a support, right? So it looks as though we finally got it. And this play is playing out just the way we spoke of a couple months back, right? So a very important key element here is that in 7 days and 20 hours, we have a massive bullish engulfing printing here on the monthly time frame. Just so that you can see what kind of pressure this can do. Please notice here that this was a monthly bearish engulfing. So if we just go ahead and highlight these two here, this was a monthly bearish engulfing. As you can see, price action ended up coming from, what was it, the opening valuation of this candle here at 363, reached a top side of around 432, and eventually came back down to 186, marking off a total decline of around 56.69%. Massive downside. Okay, team. So now you're getting the inverse reaction as we speak. 7 days and 20 hours, like I said, closure to this monthly candle would be a print of a huge monthly bullish engulfing, which can lead to a massive price increase. Okay, team, and I do have some statistics to back that. I do have geometrics to back that, and several other forms. Okay, first of all, the psychological price objective faced from this falling wedge here. The second one being the center of the triangle. Take a trend line from that top side of the triangle to the very bottom side. Apply it to the breakout candle, right? And this target is leading to a top side of around 1968 to 2511 with a focus in between of 2197. I need you to keep that 2197 in mind because we're going to be speaking about that greatly. Okay, I'm not saying that we're going to go all the way up to this target here, but just keep these targets in mind because there's a lot of rhyming in there. When you start to see a lot of rhyming for upside targets like this, it's not to say that we're going to go to those targets. It's to say that we need to observe every resistance on the way to that top side and keeping ourselves safe, of course, during that trade. All right, so yes, there is, the trend line from this point to this point. Yes, it is a target still, but I don't feel comfortable talking about that just yet. And these are the targets right there, right? So we're nowhere near that right now. We need to talk about what's present, and what's present is very powerful to all its credit here. All right, so let's move on to the next chart. Okay, this is where things are going to start getting a little interesting here. Okay, so this is a monthly time frame descending channel, right? So this descending channel also has a take profit. If we are able to measure that price objective, psychologically speaking, you take a trend line from the very top side of the channel to the very bottom side of the channel, apply it to the supposed area of breakout, and which let's just say were the coming month, right? In 7 days and 20 hours, let's just say that would be the area that we break out and not have any candle touching the inside of this range here. It would break out entirely as a brand new iteration and never looks back, right? In fact, it may just touch the support line at the monthly support of around 3 cents, which would be confluent to this support here and the conversion of resistance into support. But upon facing that type of breakout, the price objective from this massive channel is, what do you know, 21.98. And why is that familiar? Well, because we're already noticing that the center of this triangle is leading us to a top side of 1968. Naturally, I have to give the 3-spot 272 geometric level Fibonacci rate retracement at 25.11 credit. And what's the 50% of returns between this area here? That's right, 21.97. All right. That is currently what I'm observing. Sorry, guys, I thought I heard my little guy crying over there. He's playing around, coming in and out here. Now, yeah, so yeah, magically, that 21.97 appears just like it would on the descending channel. Okay, so more to it, more to the validity of a potential target here. Okay, so for the immediate short term, I definitely see that the this algorithm here is actually my personal script. It's called Substance. And I can see here that at the daily resistance marked off right at this line here is 4 cents. Okay, so that is an immediate, I would say it's immediate interest, right? I want to see that again. Now, if we open up it's a strategy that I've built too, right? It's using the Bollinger Bands, but as a mean reversion. This is the reversion variant, and you can see here that the reversion variant is pointing straight at that 4 cent target as well, right? And we're currently right there combating that mean band. And upon the conversion of that mean band to support, which just has a lot to do with this channel's newly converted resistance into support, we would essentially get catapulted to the upside here. The topside target from this here is actually facing around 721. Now, if we pull up the substance indicator and look at the monthly resistance, you're looking at a topside target of 6 cents. Okay, so naturally, we get to kind of point that out, just like something like this right here, right? Let's just keep in mind our potential targets, and definitely know that it's of high relevance, right? Lots of candles touching this as resistance level, so this could be one of let's see, the first of 2 critical supply zones. Okay, so this is looking pretty okay. Now let's go ahead and close off the reversion variant and substance and take a look at the ARQ balancer. Okay, so this is actually part of the ARQ series indicators that we have presently released, and I have actually adjusted the I think it was the look back. Yes, I adjusted the look back for pivots to 200 days, and the reason why I did that is because we're on the monthly time frame, and I need a larger look back in order for me to get the larger resistance and support levels, right? So in doing that, the mean band here is also located at 714. This is that yellow dotted line, and this is the mean from the current range of the balancer indicator. So that is also confluent to the top side of the targets that we're already looking for, right? So let's go back to the other chart and take a look at those targets. Well, look here, 679 at the 1-spot 618. That's that's about 7 cents right there too, right? So it's a golden mean, suggesting that we would potentially face some resistance at that point there. So everything is looking pretty good. I cannot stress enough how much rhyming there is. Okay, so let's just look at this as a great opportunity here. First of all, we're breaking out of these macro formations, specifically this one here on the monthly channel, and then this is the monthly falling wedge, right? This is already breaking out and validating the support. So as soon as we got that validation, upside thrust here, right? So this is looking good. Now, speaking of thrust, let's dive in. Oh, you know what? One more thing. Sorry. The 3-day Gaussian bands, right? Check this out. The top side of the Gaussian bands right here. What do you know? 6 cents again. My goodness in heaven. right? So lots and lots of rhyming with this is a statistical indicator, right? So the balancer is using some psychology and also some mathematics as a standard deviation, just like the Bollinger Bands are using two standard deviations away from the mean, and we're getting everything rhyming to that 6-cent target. Now, of course, we're going to face a little bit of resistance here at 442 because that is the mean band here of the 3-day Gaussian band. So yeah, we have a little bit of resistance there, but I see this as a temporary area of resistance where we can face a pullback, come back to our current highs of around 4 cents, then combat the upside here. We'll get that. It looks like we can push onto that 6-cent target pretty soon. Now, let's take a look at something else. This is a 4-hour right-angled ascending broadening wedge. Okay, I want you to notice that we're at critical volatility. We're at the very top and still expanding for some reason, right? And we are still pivoted towards the upside with the stochastic momentum, both the EMA3 and the SMA14, still with an upside pivot, right? This is a rare breakout already, and is very similar to the breakout that Viri did on the 4-hour time frame as well. Okay, so actually that makes me curious over the SMA50 now. Hold on just a sec. Well, the SMA50 is all the way down here. You know what? I actually think it was the daily SMA50. Oh, nice. Yes. Okay, good. So yeah, we've already converted the SMA 100 into a potential support. It's way down here. And the temporary resistance coming up, what do you know? SMA 200 on the daily at 4 cents. Why does that sound familiar? Because the 3-day time frame mean band is located right at that same spot too, from the Gaussian channel, 4 cents, 447, right? So let's come up here and see where that SMA 200 is, 456. Oh man, that couldn't be more dead on the money. There's so much rhyming here, team. So yeah, I think that we can get that little bit of a pullback from 4 cents. Like I said, come back to our current highs of around 4 cents, or 390 at this case, and then continue on to the upside. So let's go ahead and get rid of the moving average. I did not plan to go over that, which is curious that it did pop out so nicely right now. So the take profit target from this formation, of course, you have to take a trend line from the top side of the formation all the way to the bottom side, apply it to the breakout candle. Official breakout candle would be this one because it has no touch of the newly converted resistance and the support being this regression line here. The top side target is, yep, very, very confluent to the 6-cent target that we're already looking at from the reversion variant, from the substance indicator, from ARQ balancer. Oh man, and also from the top side of the Gaussian bands on the 3-day time frame. Guys, this is absolutely powerful. We have a very, very apparent upside happening on this, and I do believe that this has some more to go. Now, for the very famous volatility versus momentum, right? I'm sorry, I'm expressing that vanity like that. It's just a lot of people talk about this, right? So this is volatility represented by BBWP, momentum represented by stochastic momentum, and I have taken a back test here on the 12-hour time frame, specifically from critical contraction, which is within the 15th percentile, into an expansion phase paired with an upside pivot of stochastic momentum throughout the entire trading history, right? So please go ahead and notice here that these are all of the iterations, all of the samples that I've taken for the statistical backtest, right? So these samples have now been gathered into this data set right over here, and I have also calculated the standard deviations for this, right? So let's go ahead and go over that now. As I just, you know what, I have to upgrade this right over here because I just updated this today. So this is going to be 09/21/2023. As a date, right? So I just want to go ahead and put that down so that any time that I do update the statistics, I would have that in control. The firing of this particular signal requires for us to have the volatility component, the spectrum line, pivoted towards the upside and beyond the 15% critical line, right? Paired with stochastics. So what I'm saying here is that at this candle here, that is exactly when we had, if you look at volatility right up there, sorry, you'll see that the moving average and the volatility component are pivoted straight to the upside and beyond the 15%. Okay, so, and you'll see all the way at the bottom, stochastic momentum, you see the upside pivot too, right? That is the official firing of the signal, and the official firing of the signal at the opening range of, at the opening value of that candle on September 6th, 2023, 1 p.m. Pacific, you're looking at 219. Okay, that is where it fired, and that's where the statistics matter. Now, let's go ahead and go over that. 11 total iterations, 10 have been correct out of those 11. One incorrect, of course, right? That gives us an upside accuracy of 90.91% with an average upside thrust of a 145 spot 73% over the span of 47 spot 3 days. Now, out of this mean, I have calculated the standard deviation, right? So 68% of the results are landing at about 121.62%. That would be an upside thrust, right? I have all the targets right here. We're going to go over them. Okay, now, I also went further and I calculated the lower bound and the upper bound of the first standard deviation, being these areas here of the distribution chart, right, or the bell curve. Okay, so let's go ahead and go over those now. Obviously, the upper bound of the first standard deviation being 24.11% landed to a target that would, let's see, that would give us, 273. So just about almost 3 cents, right? Now, if we go ahead and look at the firing of the signal here, the next day, price action rallied to the top side of, let's see, the OHLC up here. We're going to look at the high for H, or H for high. It went up to 280. And we were looking for a target of 273 based on the lower bound of the first standard deviation. Perfectly executed, then we pulled back. You see, already the statistics are playing out perfectly. Upon pulling back, we're validating the channel, this huge channel, as a valid support. So we got that top side right up here, right? I'm sorry that it's a little small. It's just that there's a lot of information here, right? And then we pulled back and started validating the support, newly converted support from resistance. And then upon that validation, we continued on to the upside. Let's now look at the next targets. Okay, so following this target here would actually be, let's see, the standard deviation itself. This would be the second largest target at 122.62%, landing at 68% of the results of the bell curve, and that is taking us to a target of about 486. Now, that's already rhyming with a lot of things that you just heard me speak about. First of all, 486, very close to the 551, right? For the 4-hour right-angled broadening ascending wedge. Then we have the 447 right over here on the 3-day statistical indicator, the Gaussian channel, right? So, and I believe we had another one located right at around that 4 cent level too. Okay, I mean, probably not. I'm not sure if I actually did catch that. Oh, I'm sorry. It was the 1.618 at 679, right? But I guess we can talk about the space between the 1 fib and the 1.272, and the 1.272 at 516 or 517, sorry, rhyming very very nicely with the right here with the mean band of the Gaussian channel at 443. It's actually 447. And then also the 551 of the right-angled wedge here. Man, there's so much rhyming here. Okay, so now that's so far, let's see what kind of a move we've made, right? So starting from the 219 all the way up to the current high of the price, we've already made an 81% move to the upside. So we still have a little bit of distance away to complete that 121.62%. Now, moving on to the next targets, you're going to get your mean, right? That's going to be the average upside thrust, and that's going to be 145.73%, which is indicating a target of about 539. Now that's starting to get absolutely close to that wedge at 551. And then also the going over this every single time is ridiculous, right? And just under the 6 cent target here of the Gaussian band, right? So it's things are looking massively powerful, and also the fact that we have the 1.272 there. You guys know how much I use the 7.2 targets and the 618 targets, right? So yeah, it's looking massively powerful. Next target that we're going to observe here would be the top side of the the upper bound of the first standard deviation. I am sorry that this is actually, you know what, I will correct this because this is ridiculous, right? So let's go ahead and do that as a lower bound, and this is going to be the upper bound. There we go. And now it's correct, right? So the upper bound of the first standard deviation is leading to a 267.35% move to the upside, which would indicate a target of about 8 cents. Okay, just slightly upside of that 8-cent target. I guess if we can look at the geometrics, let's see what 8 cents kind of rhymes with, right? Okay, it's just right under the 2 fib here, and that would also be in line with the breakout target from this from the wedge, right, which would lead to, let's see, about 1132. So 8 to 11. Oh yeah, and that's everything to do with the 2.272. So 1139 to around 8 cents, which would be the 2 fib and the 2.272. That would be the next top side major resistance that I'm looking for from the statistical move. Okay, so we'll go ahead and just note that down. We'll leave it here, and we'll have that in play for us to observe as the time moves. Okay, now that is the completion of the statistical backtest, and it is looking very promising, and we absolutely have pressure to the upside. Now, one more thing to look at here is actually going to be not the reversion variant. My apologies. Let me go ahead and get rid of that. We need to take a look at the directional movement index. We want to see where the ADX is in comparison to the DMI plus being the bulls, right? So DMI plus green way on top, and the ADX is sitting at about 29.62%, pretty much at 30%. That is very exciting. Why? Well, whenever your ADX, your average directional index, is at 30%, let's just say this, 25% is actually known to be a strong trending market for whoever is leading on top. DMI plus would be bulls, DMI minus would be bears. In this case, we're at 30% with DMI plus pivoted straight to the upside, which means that is an above average, strong trending market for the bulls, and this particular metric gives absolute validity to the volatility versus momentum backtest. So this is 100% powerful. I am expecting a continuation to the upside coming into the coming days. If we have some slight pullbacks here and there, that's natural. We're always going to see a zigzag, right? We're always going to see a Z pattern as we go up, right? Always up and down and up and down and up and down. Last part of the analysis here is actually the RSI. Take a look at a quick little resistance that we're facing here on the 30-minute immediate short-term time frame. I don't know that it's going to work too much of a resistance because with upside pressure, this moving average will also be pivoted towards the upside, and that would create a potential bullish situation. So if this SMA 14 leads towards the upside, it would then render it almost useless as a resistance because it would be within the gravitational zone of the bull strength percentile. Okay, now if you are unclear about what I'm saying, this upper half of the RSI being the relative strength index, this is just it's my personal RSI that I scripted because I wanted to, put colors here for you. Okay, so this is the bullish control zone, right? And this is the bearish control zone in the bottom half. The green area is the bull strength percentile. This is the bear strength percentile. The inner workings are the weakness percentile. So bull weakness, bear weakness. Now, do know that 2% up of every border or 2% down, it is a gravitational zone. These are the zones that I put right over here for your convenience, okay? So every single zone, every single junction has a gravitational zone. So in this case here, when we were right over here facing to the upside, we got gravitationally pulled to the upside, right? So just so you know, I just want to put that out there so that you understand exactly what I mean. In this case, you can see that this topside gravitational zone right up here, right? That would be where I'm thinking that this SMA 14 could be in the immediate short term. So that means that we would have a strong probability of succeeding the topside of the SMA 14 with the gravitational pull from the bull strength percentile, which would essentially push us up. We would resist from the gravitational zone up here being this top area, right? And then we would pull back to validate the SMA 14 as a support before a continuation to the upside. And that tiny short-term, this can happen within around 2 or 3 hours because it's a 30-minute, right? So that tiny move that I'm talking about would be absolutely powerful and very much essential to push the larger time frames up to a continuation to the upside. They're already pivoted towards the upside, and they are already in the overbought percentile. This, let's see, the daily time frame is in a little bit of danger because it is in the gravitational zone here, which is right here, right? So it's in that gravitational zone. We can pull back, but we still have the opposing side's gravitational zone to bounce out of, right? And now looking at the 2-day time frame, this is 100% powerful. Look at this. It's in the gravitational zone of the bull strength percentile, right? Right in here. So when we get into that zone, right, it's 2% down. Where are we sitting? 68 spot, 50%. So from here, this can very likely get pulled to the upside and continue onwards and upwards. Now, when you get this upside pressure, the 2-day will naturally cascade into the 3-day, which is already showing us that it's in the gravitational zone of the bull weakness percentile, literally an upside thrust, which would then cascade into the 5-day time frame, being right over here and outside of the gravitational zone that would pose a danger to the downside. Team, this is definitely looking absolutely good, and the probabilities to the upside are greater than not. My favor is here towards the bulls, and I do see a continuation to the upside. You know the targets, you know the play, and we should be able to observe this as time goes on. Okay, so if you are gonna visit the live stream, I will try to go over this as we speak. Okay, so yes, we'll try to go over this tomorrow. During the live streams, I'm on usually at around 6:45 a.m. Pacific time, and for till around 10 a.m. Pacific time. Okay, team. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. I need you to do your own due diligence, and everything will be absolutely cool. But with that said, team, I wish you well a very, very good night, and I will catch you at the bell mañana. Adios.